All right, let's jump right in today. We're doing a deep dive into Exicom Tele-Systems.
Uh-huh.
And specifically, we're going to be looking at their second quarter financial results for fiscal year 2025.
Okay.
And you've given us some really fantastic source material. We've got the official company announcements.
Right.
We've got their financial statements. We've even got their investor presentation. So we're going to try to break this all down
Great.
and extract the key takeaways and hopefully provide some interesting insights.
Yeah, Exicom is a really interesting company right now, sort of operating at the forefront of, well, really two kind of key trends, I would say, the electric vehicle revolution
Right.
and also this whole move towards a more sustainable energy future.
Absolutely, yeah.
So understanding their financial performance, I think, can give us some real clues as to the future of these two sectors.
Okay, so let's unpack this a little bit. For those who may not be totally familiar with Exicom, what's their kind of core business? What are they all about?
Yeah, so they operate in two main segments. One is what they call critical power solutions,
Okay,
primarily for telecom infrastructure,
okay.
and then the other is EV charging infrastructure.
Right, so literally keeping us connected
Yeah,
and keeping those EVs on the road.
yeah.
Smart to be in both of those spaces, I think.
Yeah, absolutely.
And, their investor presentation shows they're really thinking big,
Right.
not just in India, but they have operations in Singapore, Malaysia, the Netherlands, even the US, the UK.
Yeah, they're definitely going for a global presence, which makes sense given the global nature of both of these, EV revolution and renewable energy.
Absolutely.
But let's get down to the numbers. I mean, that's what we're here for, right?
Yeah.
People love a good financial deep dive.
That's what they say. So let's start with, the kind of overall performance in Q2 of FY25. What were some of the key highlights?
Okay, so starting with revenue.
Okay.
They came in at 148.65 crore rupees. Now, that's actually down from the previous quarter, Q1 FY25, when they had hit 243.27 crore.
Got it.
But what's interesting is that this revenue figure is actually slightly higher than the same quarter last year, Q2 FY24, when they had pulled in 154.69 crore.
Okay, so down from the previous quarter,
Yeah.
but up year over year. So kind of a mixed story there on the revenue side.
Yeah, a little bit. Yeah.
What about profitability? Did that also take a hit?
So if we look at EBITDA,
Okay, and just to remind everyone, what is EBITDA?
that's earnings before interest, taxes, depreciation, and amortization.
Got it.
Basically a measure of their, core operating profitability.
Right.
So in Q2 FY25, they had EBITDA of 5.97 crore.
Okay.
That's a 4% margin.
And how does that compare to, past performance?
It's lower than Q1 FY25, where EBITDA was 28 crore,
Okay.
with a much stronger, like 11.5% margin.
Wow.
But it is significantly higher than Q2 FY24,
Okay.
where they had an EBITDA of 23.7 crore and a lower margin of 14.9%.
Okay. Interesting. So even with the revenue being a bit lower, the operating profitability margin is actually looking better year over year.
Yeah.
Does that point to them being more efficient?
Yeah, it could be. They seem to be managing costs well.
Okay.
Now, if we look at the bottom line, profit after tax, or PATI,
Okay.
in Q2 FY25, they hit 4.53 crore, giving them a 3.1% margin.
I'm going to guess, based on the pattern here, that that's also lower than Q1 FY25,
Exactly.
but higher than Q2 of the previous year.
You got it. Yeah, the same trend is playing out.
Okay.
They had 1.7 crore with an 8.9% margin in Q2 of the previous year.
Okay, so things are looking up year over year, even if they're down a bit from the previous quarter.
Right.
But what about future prospects? I mean, their order intake would be a good way to sort of look at where things might be headed, right?
Yeah, absolutely.
So what's the story there?
They're looking pretty good on that front.
Okay.
Their order intake in Q2 FY25 reached 105.36 crore rupees.
Okay.
That's higher than both the previous quarter and the same quarter last year.
Okay, so that's something to get excited about.
Yeah,
Seems like there's a strong demand for what they offer.
definitely suggests that. Yeah.
All right, so we've kind of got the overall picture,
hmm
a little bit mixed on the revenue side.
Right.
Profitability up year over year. Strong flow of new orders.
Yeah.
But you mentioned they've got those two segments, right?
Right.
The critical power solutions
Yeah.
and then the EV chargers.
Right.
What is critical power? What does that even mean?
So think about it this way. All of our communications networks, mobile phone towers, data centers,
Right.
all of that stuff needs constant reliable power.
Okay.
And so Excicom's critical power solutions are kind of like the backbone.
Mhm.
They're providing things like UPS systems, those battery backups that kick in when there's a power outage, as well as batteries and power management systems,
Okay.
all sorts of things to keep everything humming along, even when the lights go out.
So they're like the silent heroes keeping our internet and phones going.
Pretty much, yeah.
Okay, got it. And has this segment been doing well?
Yeah, it has. And that's partly driven by, I think, the rollout of 4G and upcoming 5G networks,
Right.
both in India and globally.
Makes sense.
But what's interesting is they're not just sticking to the basics, they're also expanding into new applications.
Oh,
Like, for example, they've gotten into data center batteries,
okay.
which are really crucial these days for, with all the data that we're generating.
Right.
Data centers are really big energy consumers, so that's a smart move.
Definitely riding those big tech trends.
Yeah.
Okay.
They're also tapping into the solar market by providing battery energy storage systems, or what they call BES.
Okay.
And these systems allow you to, store solar energy so you can use it even when the sun isn't shining.
Okay, so really covering all their bases in this critical power segment. Sounds like a pretty solid foundation for them.
Yeah, definitely.
It's a lot of growth potential. What about the EV charger segment? I mean, that's
Yeah.
got to be like a very exciting area for them.
It is, but it's also where things get a little bit more complicated.
Okay.
The first half of FY25, they actually saw slower growth than expected in this area.
Okay.
And that's partly because people are, kind of waiting for newer EV models to come out.
Yeah, I guess it's that classic chicken and egg problem. People don't want to buy EVs if there's not enough charging infrastructure. Companies don't want to invest in charging infrastructure if there aren't enough EVs on the road.
Exactly. It's a tricky situation.
Right.
But Exicom is, they're not just sitting back.
Okay.
They're developing a diverse range of chargers
Right.
to cover all the bases from, home charging units
Right.
to these high-power DC fast charger.
Right. You got to cater to all those different needs and types of EV drivers out there.
Exactly. And so, for example, they're working on a 3.3 kW AC portable charger. They mentioned that in their investor presentation, which I thought was pretty interesting.
Yeah, so this is pretty handy.
Yeah.
Okay.
They're also, jumping onto e-commerce platforms
Right.
to sell their chargers directly, which makes sense these days. Everyone's buying everything online.
Smart move for sure.
Yeah.
Okay, but you said slower growth.
Yeah.
Are they concerned about this?
I mean, not necessarily. They're expecting a much stronger second half of the year.
Okay.
And there are a few reasons for that.
Uh-huh.
First of all, the government is really pushing for EV adoption in a big way.
Yeah.
There's this PM Electric Drive Revolution scheme, which we can maybe talk about later, but
Right, okay.
all of these policies are making it, more attractive for people to buy EVs.
So they're banking on those government initiatives to really boost the EV market.
Absolutely.
And by extension, their EV charger sale.
Exactly.
Yeah.
And then they've also got some exciting new products that they're working on that they think will help them grab more market share.
Okay, so they've got a plan.
Yeah.
But, they're also making some pretty big investments to back up that plan.
Yeah.
What's the deal with this big manufacturing plant they're building in Hyderabad?
Yeah, so that is a big part of their growth strategy. The plant is going to be massive, 280,000 square feet total built-up area,
Yeah.
according to their investor presentation.
Okay.
It'll have separate facilities for electronics, for battery pack production, and even an admin and engineering center. So it's like a one-stop shop.
Okay, serious commitment.
Yeah.
What kind of production capacity are they aiming for with this plant?
They're really planning to scale up production significantly across the board.
Wow.
AC and DC chargers, telecom power management systems, even lithium-ion battery packs.
Wow. Okay, so it's pretty clear this is all about supporting their long-term growth, both in India and globally. Not just about today, but about, being ready for that surge in demand they're anticipating.
Exactly. They're playing the long game.
Okay.
And they're also not just thinking about quantity, they're also aiming to be as sustainable as possible.
Oh.
So the plant's designed to be a green building, meeting, the highest standards of sustainability.
Okay.
They're even going to have 1.5 megawatt solar power plant to power the whole thing.
So they're really putting their money where their mouth is on sustainability.
Yeah, they are.
That's impressive.
And they're incorporating smart manufacturing and all the latest technologies. They're aiming to start trial production in April 2025.
Okay, so full steam ahead.
Yeah.
So firing on all cylinders, it seems like we've covered, financials, business segments, this big new plant. Their outlook seems pretty positive.
Mhm.
What specifically is driving this positive outlook?
I think it's a combination of things. First of all, um, the government's push for EVs.
Right,
They have a strong position in the telecom power solutions market.
right.
And then their ongoing expansion into new applications and markets, like we talked about those data center batteries and those solar energy storage systems.
Right, so kind of diversifying their revenue streams,
Yeah,
hedging their bets.
exactly.
But those government policies, you mentioned that PM Electric Drive Revolution scheme earlier.
Right.
What is that all about?
So this is a really big initiative for the Indian EV market.
Okay.
It has a 10,900 crore rupee budget,
Okay.
and it's aimed at basically getting close to 3 million electric vehicles on the road over the next few years.
Wow, that's massive.
Yeah.
Are they just talking cars?
No, it's everything. Electric two-wheelers, three-wheelers, buses, trucks,
Okay.
even ambulances. So they're trying to electrify like all forms of transport.
That's ambitious.
Yeah.
Okay.
And and then there's, they're also doing stuff to support the charging infrastructure, which we talked about is really crucial for getting people to actually buy EVs.
Right, right.
A big chunk of that scheme's budget, like 2,000 crore rupees, is going towards incentivizing companies to set up 72,000 charging stations across the country.
Wow.
And not just those slow chargers.
Oh.
They want a mix, including lots of fast chargers,
Okay.
especially on highways and in public areas.
So tackling that range anxiety issue.
Exactly.
That's a big one.
Yeah.
Okay.
So yeah, they're trying to really, I guess, make India EV friendly in a big way,
Right.
and Exicom is in a good position to benefit from that.
They're in the right place at the right time.
Yeah, I think so.
Okay, great. So we've talked about, growth, expansion, this government support, all very exciting stuff.
Yeah.
What about their, kind of financial stability? Can they actually pull all of this off?
Well, according to their investor presentation, they seem to be in a good spot.
Okay.
Their shareholding pattern and credit rating section shows a healthy mix of promoters, institutional investors, and public shareholders.
Okay.
Plus, they have a decent credit rating, carry BBB plus boat,
Okay.
which basically means that, they're considered pretty safe when it comes to paying back their debts.
So investors can feel confident about their financial health.
Yeah, it's looking good on that front.
Okay, great. So let's dig a little deeper
Yeah.
into, some of the new things they're doing and some of the customer wins they highlighted in their presentation.
Yeah.
There's something going on with the critical power segment, right?
Yeah, so, they're kind of going beyond the traditional telecom market.
Okay.
For example, they've started supplying power converters for battery swapping stations,
Okay.
which are becoming really popular, especially for electric two-wheelers and three-wheelers.
Yeah.
So,
Just to clarify, battery swapping, that's where you don't plug in your EV and wait for it to charge.
right.
You just swap out your battery for a fresh one.
Exactly. Yeah. Super quick and convenient.
Yeah.
So,
Got it.
so Exicom is providing those power systems for these swapping stations.
Okay.
They're also supplying power converters for fast charging applications in the two-wheeler segment.
Okay, so really targeting those niches within the EV space.
Yeah.
Yeah.
And they're even dipping their toes into the residential energy storage market.
Okay.
So their investor presentation mentioned that they've got pilot orders for lithium-ion batteries for home energy solutions.
Oh, that's an interesting area.
Yeah.
As more people go solar, they're going to need ways to store that energy.
Exactly. Yeah.
So they're getting ahead of the curve there.
Yeah.
But they're not forgetting their core market either.
Right.
What about telecom?
Yeah, so they secured some orders from a leading Indian telecom company
Okay.
for power systems and batteries for their core sites.
Okay.
So keeping their existing customers happy, but they're also, expanding their global reach.
Okay.
They've got new customers for power systems and batteries in the Philippines.
So not just an Indian company anymore. They're truly going global.
Yeah.
Yeah.
And then they even got a deal to supply power systems across 9 countries in Africa for a major tower company.
Wow.
So,
They're really expanding their footprint.
yeah.
They seem to be everywhere.
And they're making sure everyone knows about it because they're at all the big industry events, both in India and internationally.
Right.
So they were at like the Intercharge Network Conference in Berlin, the Battery Show India, the Riyadh EV Show. I mean, they're really making their presence felt in the industry.
Right, because it's not just about selling products. It's about being seen as a thought leader.
Yeah, absolutely.
And being, on the forefront of innovation.
Yep.
Okay, so they're doing a lot of things right, it seems like.
Yeah.
There's one thing I wanted to explore a bit further, this partnership with Hubject.
Yeah.
For the e-roaming and the plug-and-charge solutions.
Mm-hmm.
I mean, that sounds like a real game changer for the EV charging experience.
It is, yeah. It's all about, making life easier for EV drivers.
So can you explain, what is e-roaming and what is plug-and-charge? For those who don't know, how does that work?
So basically, e-roaming allows EV drivers to charge their vehicle at any charging station, no matter who owns or operates it.
Okay.
So kind of like how you can use your mobile phone on different networks.
Right.
So you don't need like a million different accounts and subscriptions for every charging network out there.
Okay, so that's a big hassle eliminator.
Yeah.
And what about plug and charge? That sounds futuristic.
It is pretty cool.
Okay.
So with plug and charge, you just plug in your EV.
Okay.
And the charging starts automatically.
Okay.
There's no RFID cards.
Okay.
There's no apps. No messing around with authentication.
Right.
The car and the charger basically talk to each other and take care of everything.
Sounds incredibly convenient.
Yeah.
So how's this partnership going?
They're making good progress.
Okay.
They've been meeting with all the key players in the industry.
Okay.
Charging station operators, EV manufacturers, and so on, and the response has been positive.
Okay, so buy-in from the industry.
Yeah, so they're moving from the planning stage to implementation.
Okay.
And they're aiming to have plug and charge, up and running in their chargers by March 2025.
So that's not that far off.
No.
Okay.
Yeah.
So EV drivers in India could be experiencing that seamless plug and charge convenience, in just over a year.
Exactly.
That's pretty exciting.
Mm.
But let's be realistic. Exicom is not operating in a vacuum.
Right.
Who else is out there, vying for a piece of this EV charging, this critical power solutions pie?
Yeah, it's a competitive landscape.
Yeah.
Both established players and newcomers.
Okay.
So on the EV charging front, they're up against, companies like ABB, Delta Electronics, Siemens.
Okay.
These are kind of the big boys.
Okay.
And then you've got smaller, more agile companies, trying to carve out their niche.
Right.
So yeah, it's a real mix.
Okay, so multinational powerhouses and, scrappy upstarts.
Exactly.
Yeah.
And it's always changing, as the market evolves and new technologies emerge.
Yeah. Right.
The critical power solutions market is kind of similar. They're up against companies like Emerson,
Okay.
Schneider Electric, Vertiv.
Okay.
These are all, global leaders in power and cooling solutions.
Okay, so stiff competition.
Yeah, definitely.
But what gives Exicom an edge? What are their strengths in this environment?
So I think one of their biggest strengths is their deep understanding of the Indian market.
Okay.
They've been operating in India for over 3 decades. So they have these strong relationships with key customers and partners.
Okay.
They have that kind of local knowledge that's invaluable.
Right. It's not easy for those foreign companies to just come in and navigate a market like India.
No, absolutely not.
So what else?
I think their commitment to innovation.
Okay.
They're constantly pushing the envelope,
Okay.
coming up with new products and technologies to meet the customer's needs.
Okay.
And they're laser focused on quality and keeping their prices competitive.
Okay. That's a tough combination to beat.
Yeah, it's definitely.
So sounds like they've got a solid strategy, but every business has its challenges.
Right.
What are some of the hurdles they're facing?
I think one of their biggest challenges is managing their rapid growth.
Okay.
It's a good problem to have in a way.
Right.
But scaling up operations, maintaining quality, managing their supply chain, it can be tricky.
What growing pains?
Yeah, exactly.
But those are internal challenges.
Yeah.
What about external factors?
Yeah, well, the global economy is is a bit of a roller coaster these days
Right.
with inflation and rising interest rates
Right.
and geopolitical uncertainty.
Right.
All of those things can impact their business,
Are they?
even if they're, doing everything right internally.
Right.
And then, raw material prices, that's a big one.
Okay.
The components they need for their products,
Right.
lithium, cobalt, copper, all those things.
Right.
Those prices can really fluctuate,
Yeah.
which can impact their profitability.
Right.
And then also the regulatory landscape.
Okay.
Government policies around EVs
Right.
and renewable energy are constantly changing.
Right.
So they have to be really agile and adaptable.
So keep their eyes on the ball
Yeah,
and be ready to pivot when necessary.
exactly.
Okay, so they're facing some big challenges.
Yeah, they are. But they also have some incredible opportunities in front of them.
Okay, well, let's talk about the opportunities.
Yeah.
We've kind of touched on some, but what else is on the horizon for them?
So their investor presentation, really highlighted their focus on the growing e-bus market in India.
Okay,
They're really bullish on that segment.
makes sense. Right.
Yeah.
I mean, we talked about the government incentives earlier.
Right.
Sounds like public transportation's a big focus of that push.
It is, yeah.
Yeah.
The government wants to decarbonize public transportation.
Yep.
And e-buses are, a major part of that strategy.
Okay.
Plus, there are financial incentives in place to make e-buses more attractive,
Okay.
both to state transport companies
Okay.
and private operators.
Okay. So it's becoming financially viable to make that switch.
Yeah, more and more so.
Okay.
And, the government has set these aggressive targets for electrifying bus fleets across the country.
Okay.
So this means, a huge opportunity for companies like Exicom, who are, providing that charging infrastructure.
Sounds like a perfect storm brewing in their favor.
It does, yeah.
Okay.
And they're already, they're not just waiting around. They're making moves.
Okay.
They've already secured orders from one of the biggest e-bus manufacturers in India,
Okay.
with deliveries starting in the next quarter.
So they're getting in on the ground floor.
Yeah, they are.
They're making it happen,
Yeah,
not just talking about it.
exactly. Yeah.
Okay, this is fascinating. We've covered so much ground, it feels like you're just getting started.
Yeah.
There's still so much more to explore, their financials, customer experience strategies, these competitive dynamics.
Oh, yeah, we've only just begun.
So for now, we'll have to pause here.
Yeah.
But don't go anywhere, because in the next part of our deep dive, we're going to unpack even more key insights from Exicom's financial performance.
Right.
And really kind of explore what it all means for you.
Yeah, looking forward to it.
Okay, great. So stay tuned.
All right, welcome back. We're ready to dive even deeper into Exicom's world,
Okay.
picking up right where we left off.
Okay.
Before we move on, I just wanted to circle back to their investor presentation for a second.
Okay.
There are a few more kind of nuggets in there I thought were really interesting.
Okay.
One thing that really jumped out at me was their focus on enhancing the customer experience, particularly when it comes to EV charging.
Right.
So they're not just thinking about, billing charges, but they're thinking about that whole experience.
Right, because if it's a pain to charge your EV, people are less likely to buy them.
Exactly, yeah. Convenience is key.
Yeah.
And we already touched on, some of the things they're doing in this area, like the partnership with Hubject for e-roaming and plug and charge.
Right.
Those are huge steps in the right direction.
Absolutely.
But what else are they doing
Yeah. What else?
to improve that experience? Well, one thing is they're really focusing on reliability.
Okay.
Nobody wants to pull up to a charging station and find out it's out of order.
Right.
So they're investing in, remote monitoring systems,
Okay.
proactive maintenance to make sure their chargers are always up and running.
So minimizing downtime and frustration.
Exactly.
Wow.
Yeah. And they're also really prioritizing safety.
Okay.
So incorporating advanced safety features into their chargers, to protect both the vehicles and the people using them.
Makes sense. Safety should always be a top priority when dealing with high voltage electricity.
Absolutely.
Yeah.
And of course, a great customer support is a must.
Right.
So they have a dedicated team ready to answer questions, resolve issues, providing assistance.
Okay, so it sounds like they're really taking a holistic approach
Yeah,
to making sure EV drivers have a good experience.
exactly.
Okay, great. So now let's shift gears a bit and look at their financials a bit more closely.
Okay.
I mean, we touched on some of the highlights earlier,
Right.
but I think it's worth taking a closer look at like how their revenue is split between those two main segments, the critical power and the EV chargers.
Yeah, for sure.
So we know the total revenue for Q2 FY25 was 148.65 crore rupees.
Right.
But where did that revenue come from?
Okay, so their investor presentation actually breaks it down for us.
Okay.
Their critical power segment contributed 105.36 crore rupees,
Okay.
while their EV charger segment brought in 43.29 crore rupees.
Okay, so critical power is still the bigger revenue generator.
Yeah.
71% roughly of the total.
Right.
But it seems like maybe the balance is shifting a little bit because, I mean, didn't we say earlier their EV charger business is growing faster?
Yeah, you're right. If we look back at Q2 of the previous year, critical power made up about 65% of their revenue,
Okay.
and EV chargers were about 35%. So it's definitely gaining ground, which makes sense.
Yeah.
The EV market is growing much faster than the telecom infrastructure market, which is a bit more mature.
Makes sense. Now let's talk about margins.
Okay.
We mentioned that their EBITDA margin for Q2 FY25 was 4%,
Right.
which is a measure of their operating profitability.
Yeah.
But what about their gross margin,
Okay.
which tells us how much money they're making on each rupee of revenue
Right.
after accounting for the cost of goods sold?
Right.
So what's the story there?
So their gross margin for Q2 FY25 came in at a healthy 31.5%.
Okay.
So that means that, they kept about 31.5 pays
Okay.
for every rupee of revenue they generated.
Okay.
Yeah.
All right. And are they keeping those margins consistent?
Yeah, they've been hovering around, the 31 to 32% range for the past few quarters.
Okay.
So they're managing to maintain healthy margins,
Right.
even as they scale up, which is a good sign.
Definitely a positive indicator.
Yeah.
Now, let's talk about cash flow.
Okay.
Cash is king. We hear that all the time.
Right.
How are they doing in that department?
So their cash flow statement gives us a little glimpse into, how they're generating and using cash.
Okay.
In Q2 FY25, they actually had a net cash outflow from operating activities of about 2,017.68 lakh rupees.
Wait, a negative cash flow from operations?
Yeah.
That doesn't sound great.
It's not ideal, but I think it's important to understand why it's happening.
Okay.
And in Exicom's case, it's mainly due to an increase in their working capital requirements.
Okay.
So they're basically investing more cash in things like inventory
Okay.
and accounts receivable, which is the money that customers owe them to support their growth.
Okay, so it's a sign that they're expanding.
Exactly.
Not necessarily a bad thing.
It's a natural part of growing a business,
Okay.
but it is something they need to manage carefully.
Okay. What about their cash flow from investing activities?
So that's where we see a significant outflow, 36,573.73 lakh rupees in Q2 FY25.
Okay.
And this is primarily due to, their investment in that new manufacturing plant in Hyderabad.
Right.
And their ongoing investments in research and development.
Okay, so putting a lot of cash into fueling future growth.
They are, yeah. And those are the kinds of investments that are crucial for long-term success.
Right.
But, they need to make sure those investments pay off
Oof.
down the road. Yeah.
Now, what about cash flow from financing activities?
Okay, so this is basically where they raise money.
Right.
And in Q2 FY25, they had a net inflow of 36,827.19 lakh rupees.
Okay.
And this mainly came from, the proceeds of their IPO when they went public.
Right.
And from borrowings.
Okay, so using a mix of equity and debt to finance their expansion.
That's right, yeah.
Pretty common strategy for a company in growth mode.
It is, yeah.
Okay, so a little bit of a mixed bag in terms of their cash flow situation.
Yeah.
They're investing heavily in growth, which is leading to that negative cash flow from operations.
Right.
But they're balancing it out by raising money through financing activities.
Exactly.
Okay.
Yeah.
So let's look at their balance sheet.
Okay.
I mean, what does that tell us about their overall financial health?
So the balance sheet gives us a snapshot of, their assets, liabilities, and equity at a specific point in time.
Okay.
As of September 30, 2024, their total assets were a healthy 131,555.6 lakh rupees,
Okay.
while their total liabilities were 65,491.29 lakh rupees,
Okay.
leaving them with an equity of 66,063.87 lakh rupees.
Okay, so their assets are more than double their liabilities.
Yeah.
I mean, that's a good sign, right?
Yeah, it is. It indicates a strong asset base
Okay,
and a relatively low level of debt.
good. What about their current ratio,
Okay.
which tells us about their short-term liquidity?
Right.
Their ability to, meet those short-term obligations.
Right. So their current ratio as of September 30, 2024 was 2.11,
Okay.
which means that, for every rupee of current liabilities, they had 2.11 rupees of current assets.
So more than enough assets to cover their short-term debts.
They do, yeah. They're in good shape on that front.
Okay, that's reassuring.
Yeah.
Now, what about their long-term financial health?
Okay.
What's their debt-to-equity ratio like?
So that's a measure of, how much debt they're using to finance their assets compared to their equity.
Right.
And as of September 30, 2024, their debt-to-equity ratio was 0.20.
Okay. And what does that tell us?
So that means that, for every rupee of equity, they had 20 pays of debt.
Okay.
That's a very low debt-to-equity ratio,
Okay.
which indicates that they're not overly reliant on borrowing.
Okay, so they're not over-leveraged.
Exactly.
Okay.
And that means that they're less vulnerable to, economic downturns or interest rate hikes.
Right. Okay. So taking all of that into account, assets, liabilities, debt levels,
Yeah.
it sounds like their balance sheet is painting a pretty healthy picture.
It is, yeah. They're in a strong financial position to support those ambitious growth plans.
Okay, great.
Right.
So now let's talk about the people behind the numbers.
Okay.
What's the story with their management team
Okay.
and their approach to corporate governance?
Yeah, so their investor presentation highlights their board of directors
Okay.
and their management team.
Okay.
And they seem to have a good mix of experience and expertise.
Okay, and what's the makeup of their board like?
It's a pretty diverse group. You've got industry veterans,
Okay.
financial experts,
Okay.
independent directors.
Okay.
So that diversity of thought and experience is really valuable.
Yeah, diversity is always good.
Absolutely. And their board is chaired by an independent director, which is a positive sign in terms of corporate governance.
And why is that?
Well, it ensures that the board isn't dominated by the management team,
Okay.
and that there's an independent voice at the top providing a check and balance.
So accountability.
Exactly. Yeah. Now, their management team is led by Anant Nahata.
Okay.
He's the managing director and chief executive officer.
Okay.
And he's got a ton of experience in the power and energy sectors,
Okay.
having worked at, big companies like ABB and Schneider Electric.
So he knows the industry inside and out.
He does, yeah. And he's surrounded by, a strong team of professionals with experience in finance, operations, technology, marketing, all those areas.
So all the bases covered.
It seems that way, yeah.
All right.
And they've also, brought in some fresh talent from outside the power and energy sectors,
Oh,
which
yeah.
can bring in some new ideas and approaches.
Always good to shake things up.
Absolutely, yeah. Now, in terms of corporate governance, they seem to be following best practices. They've got a comprehensive policy in place and have adopted recommendations from, the SEBI Committee on Corporate Governance,
Okay.
which is the regulatory body in India that oversees listed companies.
Got it.
So they're really adhering to the rules and regulations.
Okay.
They've even appointed a company secretary and compliance officer
Okay.
to make sure they're on top of everything.
Okay.
Yeah, they're serious about doing things the right way.
Okay. That's good to know. Now let's talk about their big picture strategy.
Okay.
How do they plan to achieve all these ambitious goals we've been talking about?
So their growth strategy is really a two-pronged approach.
Okay.
They're focusing on both organic growth
Okay.
and strategic acquisitions.
And what does organic growth mean in this context?
So that basically means, growing their existing businesses,
Okay.
grabbing more market share, expanding into new product categories, moving into new geographies. So it's about growing from within.
So making the current operation bigger and better.
Exactly, yeah. And they're doing that by, investing heavily in innovation,
Right.
constantly developing those new products and technologies to meet those changing customer needs.
Right.
We've seen evidence of that,
Yeah.
with their new portable charger.
Right.
They're moving to e-commerce.
Right.
And those high-power DC fast chargers.
Okay, so not standing still,
No,
constantly pushing forward.
exactly, yeah.
Okay.
They're also expanding their sales and distribution network,
Okay.
adding distributors across India,
Okay.
and growing their international presence.
And that brings us to the strategic acquisitions.
Right.
I mean, we talked about, their purchase of Tritium, that Australian EV charging company.
Right.
What did that bring to the table?
That was a big move for them.
Okay.
It gave them access to new markets,
Okay.
new technologies, a talented pool of people.
Okay.
So it was a major step in their global expansion plan.
Okay. So growing organically from the inside and making strategic moves to expand their reach and capabilities.
Exactly.
It seems to be working for them.
Yeah, it does.
Okay. This is all very impressive, but, let's be honest. A lot of this sounds like potential
Right.
promises of what's to come.
Yeah.
But right now, how does Exicom stack up as an investment opportunity?
Right.
Is this a stock that people should be buying at its current price?
Oh, that's the million-dollar question.
Right.
And it's not one that I can answer for you.
Of course.
It really depends on your individual investment goals, your risk tolerance,
Right.
and your assessment of Exicom's future prospects.
Of course, everyone needs to do their own research.
Yeah, absolutely.
Yeah.
But I can, I can give you some insights into how the market is currently valuing Exicom based on, the publicly available information.
Okay. Yeah, I'm curious. What's the market saying about Exicom right now?
So as of November 17th, 2024, Exicom's market capitalization, which is basically the total value of all their outstanding shares, is around 14,400 crore rupees.
That's a big number.
It is, yeah.
Okay.
And it tells us that, the market is pretty optimistic about Exicom's future growth potential.
Okay.
Yeah.
And what are some of the ways that investors evaluate companies like Exicom?
Okay.
What are the key metrics that they look at?
So one of the most common metrics is the price to earnings ratio,
Okay.
or PE ratio for short.
Okay.
And this basically compares the company's market capitalization to its net income, which is, how much profit they're making.
Right.
So if a company has a high PE ratio, it means that, the market is expecting their earnings to grow significantly in the future.
Right, because they're willing to pay more for each rupee of current earnings.
Exactly.
Because they think there's going to be more down the road.
Exactly, yeah.
Okay.
And right now, Exicom's PE ratio is around 318.
Okay.
That's a very high PE ratio,
Okay.
indicating that the market is very bullish
Okay.
on their future earnings growth.
Okay. Are there other metrics that are used to assess their valuation?
Yeah, so another commonly used metric is the price to sales ratio,
Yeah.
or PS ratio.
Okay.
And this one compares the company's market capitalization to its revenue.
Okay.
So a high PS ratio basically means that, the market is placing a high value on the company's revenue.
Okay.
Perhaps because they expect that revenue to grow rapidly or become more profitable in the future.
Right.
Yeah. And Exicom's current PS ratio is around 35.
Okay.
So again, that's a high ratio, suggesting that the market is pretty optimistic
Okay.
about their future growth.
Okay, so both the PE and the PS are pretty high.
Yeah.
Indicating that the market has big expectations. But it's important to remember that these metrics are based on historical data and market sentiment.
Right.
It doesn't necessarily guarantee future performance.
No, it's not a crystal ball.
Right. So don't just blindly follow the market's lead.
No, absolutely not. It's essential to do your own research,
Right.
understand the company's fundamentals,
Right.
and make your own decisions
Right.
based on your own assessment
Yeah.
of their prospects.
Makes sense.
Yeah.
But let's be realistic. Every investment has its risks.
Right.
What are some of the key risks to consider when you're thinking about Exicom as a potential investment?
So I think one of the biggest risks is what we call execution risk.
Okay.
They've got these ambitious plans,
Right.
but there's no guarantee that they'll be able to pull them off flawlessly.
Right. Things could go wrong.
They could, yeah.
Oh, sure.
They might face delays in getting that new plant up and running.
Right.
They might run into supply chain problems.
Mm.
They might struggle to gain traction in new markets.
Right.
Lots of things could throw them off course.
So it's not a slam dunk.
No, not at all.
Okay.
Another risk is competition. We
Right.
talked about some of their rivals earlier.
Right.
Those big global players and those smaller companies trying to disrupt the market.
Right.
So that competition could, squeeze their margins,
Okay.
make it harder for them to grab market share.
Okay. So they need to stay sharp.
Yeah,
Stay ahead of the game.
absolutely.
Good.
And then there's always the risk of technological disruption.
Right.
New technologies could emerge that make their current products obsolete.
Right.
That's always a concern in fast-moving industries like this.
But keep innovating, pushing the boundaries.
Exactly. And they can't forget about regulatory risk.
Right.
Government policies around EVs and renewable energy are in constant flux.
Right.
So those changes could have a big impact on their business.
It's like they're playing a high-stakes game of chess. They've got to anticipate their opponent's moves.
Yeah, that's a great analogy.
Adapt their strategy.
Yeah.
Okay.
And they can't ignore the global macroeconomic environment either.
Right.
We've got inflation,
Right.
rising interest rates,
Right.
geopolitical uncertainty.
Right.
All of those things can affect their performance, even if they execute their plans perfectly.
Okay. So a lot to consider,
Yeah.
both positive and negative.
Right.
It's about weighing those potential rewards against the risks.
Exactly. Yeah. It's a complex decision, and
Right.
there's no one-size-fits-all answer.
Okay, great. So we've covered a lot of ground here.
Yeah.
But before we jump into the next part of our deep dive,
Right.
I want to zoom out for a moment
Okay.
and just talk about, what are some of the bigger trends
Okay.
shaping the EV and renewable energy sectors?
Right.
Because these are the forces that are going to, really shape Exicom's future. Right?
Yeah, absolutely. And these are the same trends that, you as an investor need to be aware of.
Right.
So I think, one of the most significant trends is the global push towards electric vehicles.
Right.
Governments around the world are setting these ambitious targets
Right.
for EV adoption, and consumers are becoming more aware of, the environmental and economic benefits of going electric.
Yeah. We're really seeing a shift away from those gas-guzzling combustion engines.
Yeah.
And it feels like it's just getting started.
It is, yeah. And this shift is creating these massive opportunities for companies like
Okay.
Exicom that are part of that EV ecosystem.
Right. What about renewable energy? What are the
yeah.
big trends there?
So the renewable energy sector is experiencing explosive growth.
Okay.
The cost of solar and wind power has plummeted
Right.
in recent years, making them competitive with fossil fuels.
Yeah.
And with all the concerns about climate change and energy security,
Right.
this is a trend that's here to stay.
Yeah, it feels that way.
It does, yeah. And it's driving, a wave of investment
Yeah.
from governments,
Okay.
businesses around the world.
Okay.
So companies like Exicom, who provide those, critical power solutions for these renewable energy projects,
Right.
are in a prime position to benefit.
So the stars seem to be aligning for them.
They do, yeah.
Okay.
And here's another trend that's working in their favor.
Okay.
The electrification of just about everything.
Right.
We're not just talking about cars and trucks.
Right.
We're talking about heating,
Okay.
industrial processes, pretty much every aspect of our lives.
Okay. Electricity is becoming the fuel of the future.
It is, yeah. And as the cost of renewable energy continues to fall and battery technology keeps improving, this trend is only going to accelerate.
Okay. So Exicom is right in the middle of this energy revolution,
Yeah.
riding these powerful waves of change.
They are, yeah. And they're not just passive beneficiaries. They're actively contributing to this transformation
Right.
with the products and technologies.
Okay, great. Now let's circle back to the competition for a minute.
Okay.
We talked about some of those big names.
Right.
ABB, Siemens, Delta Electronics.
Yeah.
Formidable opponents.
They are, yeah.
So how does Exicom measure up?
Okay.
What are their strengths and weaknesses?
So let's start with their strengths.
Okay.
I think one of their biggest advantages is their deep understanding of the Indian market.
Okay.
They've been operating here for over 3 decades.
Right.
So they have those strong relationships
Right.
with key customers and partners
Right.
that those foreign companies just don't have.
It's like they have that home field advantage.
Yeah, they do.
Oh,
And they're also very committed to innovation,
Yeah.
Constantly investing in research and development,
Right.
coming up with new products and technologies to stay ahead of the curve.
Right.
And they're also focused on, delivering high quality products at at competitive prices.
Okay, so checking all the boxes.
Yeah, they are.
Okay.
And they're building a strong brand reputation
Oh,
for reliability, innovation, customer focus.
a good reputation is invaluable these days.
It is, yeah. But they're not without their weaknesses.
Okay.
One area I think where they need to improve is their scale.
Okay.
They're still relatively small compared to some of those global competitors.
So they need to get bigger
Yeah,
to compete with the big boys.
exactly. Yeah, that new manufacturing plant will help, but they need to keep expanding rapidly to catch up with those industry leaders.
Yeah.
And then another area where I think they could step up their game is their international presence.
Right. They've made some progress.
Right.
We talked about the tritium acquisition, and they've got those deals in Africa and the Philippines. Host speaker.
All right, welcome back. We are in the final stretch of our deep dive into Exicom Tele-Systems.
It's been quite a ride.
It has. We've gone through, their financials, their growth strategy.
Right.
We've looked at the competitive landscape.
Mm-hmm.
It's a lot to take in.
It is a lot of information.
But now I think it's time to, sort of zoom out a little bit and try to connect the dots.
Right. Try to make sense of it all.
What does it all mean?
Yeah.
Is Exicom a company that, people should be keeping on their radar?
That's the big question.
Yeah.
And of course, I can't give investment advice,
Of course.
but I'm curious, based on everything we've discussed, what's your overall assessment? Yeah. What's your impression?
What are your thoughts on their prospects?
Yeah. So, based on everything we've discussed,
Yeah.
I would say cautiously optimistic
Okay.
about their long-term potential. I mean, they're playing into the fastest growing markets in the world.
Right.
Electric vehicles, renewable energy.
Mm-hmm.
They've got, a track record of innovation.
Right.
Their financials look pretty solid.
Yeah.
They have a clear vision for the future.
Yeah. So there's a lot to like, but,
What?
well, there are risks.
Of course. Yeah.
We've talked about the challenges.
Right.
Competition, execution risk, technological disruption, the regulatory landscape.
Right.
It's a complex equation with a lot of moving parts.
Right. It's not a guaranteed home run by any means.
No. But I think, if they can execute their plans effectively,
Yeah.
they have a real shot at becoming a major player in the global sustainable energy market. It'll be really interesting to see how they leverage, their expertise in power electronics and energy storage to create those new opportunities.
Right. Yeah.
And maybe even disrupt the traditional energy players.
Yeah, I mean, it is an exciting time to be, watching this space unfold.
It is.
One thing that I was, I think really impressed by during our deep dive was Exicom's commitment to sustainability.
Yeah.
And they're not just, talking about it. They're really walking the walk.
Yeah.
That new plant being a green building,
Uh-huh.
using renewable energy in their own operations. Those are concrete examples.
Yeah, you are. Yeah.
And of course, their products are helping to drive that transition
Right.
to a cleaner energy future.
Absolutely. Yeah.
And this is a big deal, I think, for a lot of investors these days.
Yeah.
They want to, put their money behind companies that are doing good for the world.
Yeah, and people are becoming more and more conscious about, where they invest their money.
Right.
And so companies that prioritize, these ESG factors,
Right.
environmental, social, governance,
Right.
they're attracting a lot of attention these days.
Right. And Exicom seems to be, on the right side of that trend.
Yeah, they do.
All right. So as we wrap up this deep dive,
Mm-hmm.
what are some key takeaways for you, the listener?
Okay.
What should you be thinking about after hearing all of this?
Well, I think first and foremost, the EV and renewable energy sectors are booming.
Oh, yeah.
And this growth is likely to continue
Yeah.
for many years to come.
Uh-huh.
These industries are being driven by, a powerful combination of factors.
Right.
You've got the government support.
Right.
You've got the technological advancements.
Right.
You've got the increasing consumer demand.
Absolutely.
And, Exicom is right in the thick of it, positioned to capitalize on this massive opportunity.
Yeah.
They've got, like you said, they've got the products, they've got the strategy, they've got the team.
Right.
But there are those risks
Right.
that come with any investment.
With any investment.
And Exicom is no exception.
Right.
So it's all about, weighing those risks against the potential rewards.
Right. And also, I think, looking beyond the numbers,
Yeah.
really understanding the bigger picture.
Yeah.
Exicom's commitment to sustainability.
Right.
That's a big part of their story.
It is.
And it sets them apart, I think, from many other companies in this space.
It does, yeah.
So as we say goodbye for now,
Okay.
we hope that this deep dive has, given you some valuable insights and a new perspective
Uh-huh.
on Exicom Tele-Systems. They're certainly a company to watch.
They are.
And we have a feeling, you'll be hearing a lot more about them in the years to come.
Thanks for joining us on this journey.
Yeah. And we always encourage you to do your own research and your own due diligence.
Absolutely.
And hopefully this deep dive is giving you, a solid foundation
Yeah.
to build upon.
Right.
So until next time, keep learning, keep exploring, keep diving deep into the world around you.
We'll see you then.